Hi everybody, my name is ronsorr. I'm with Forrester Financial Partners. Today I wanted to discuss with you 4 different aspects of understanding final expense insurance. One thing is of final expense insurance, you may have heard about it as burial insurance. You may have heard about it as insurance for seniors. You may see many commercials on television. I want to break those things down to you and help you get an understanding of how final expense insurance works. One thing that you got to keep in mind is that we're in this baby booming population where there are seniors retiring, baby boomers are retiring at a rate of 10,000 people per day. Okay, so that's one of the main things that that insurance companies wanted to lock in on to help feed that market and help those people that don't have insurance at those later years, help them get insurance. So it is considered as a inexpensive type of insurance, but it does have many different mechanisms inside of it, and I'm going to help you break those down to understand how do they get to that certain cost. At the end of this video, go ahead and answer the few questions that I have down below and click on and set an appointment, because I will send you out a free Social Security handbook. Okay, so let's look at the basic 4 aspects of final expense insurance. One, there's the questionnaire, which is the underwriting part of it. The other one is the MIB report. The other one is how they make or set your premiums. And then the 4th one that we want to talk about is how do they rate your level of health to get you qualified as insurance. So the first one we'll look at is questionnaire. The questionnaire is very simple. This is the whole underwriting process. There is no process that says you have to go and do a medical background, or what they'll come in and they'll send someone in to take blood or take hair samples or urine samples. There's none of that. It's just pretty much a 15-question questionnaire. And when you speak to the agent, someone like me, they are going to ask you those same questions first, because the agent, a person like me, is the first underwriter for an insurance company. Now, I represent 4 different final expense insurance companies, so I'm always trying to find the one that will best suit you and your individual needs. So the questionnaire will ask you a series of questions. It's going to ask you about diabetes. If you have diabetes, there are 2 insurance companies that I deal with that will still cover you. So based on the questions, it helps me direct you towards which insurance company would best suit you. And those questionnaires will also help the underwriter determine your level of risk. Because now you're in your later years, your health is deteriorating somewhat, or it may be, and now your level of your mortality is coming towards an end. So that is where the insurance companies do that first level of underwriting. The second thing that they look at is called the MIB report, which is called the Medical Information Bureau. Think of it as a credit check on your medical history. So every time you get a prescription, every time you go to the doctor, they sign in and they fill out information that's going into this Medical Information Bureau. Pretty much insurance companies are the only ones that are using it. So what happened in this process is I ask you those 15 questions in the questionnaire, then we're going to call that company's underwriter, and that underwriter is going to ask you the same set of questions. And as that underwriter is asking you the questions, they're going to do a search on your Medical Information Bureau. They're going to go through and look at what type of medications you're taking, how many times you went to the doctor, and everything. Those questions that you answer, those are basic questions, but the real meat of it is the Medical Information Bureau, and it's based on that they will determine your rating when they qualify you for insurance. So the questionnaire is broken down into 3 sections. If you answer yes to any of the questions in the first questionnaire, more likely you won't even be covered for life insurance or final expense insurance. So those are some of the steps that you have to look at. How the payments are set is that all the payments are pretty much locked in. They are a standard rate of payments. And this is something that you want to be very cognizant of, because how an MIB report works with your payments is that when you see these ads on television, and many seniors are talking about how they're getting such low rates on their insurance, and they're getting $50,000 and $60,000 and $80,000 life insurance policies, and their payments are only like $20 and $30 a month. Well, what happens is federal agencies or the government that regulates life insurance, they set a what is called a look-back term for life insurance companies. So what happens is that every life insurance company has 24 months to evaluate your policy. So at the end, if you've gone past the 24 months, then your policy is pretty much locked in. So anytime before that, which is some of what a lot of these other insurance policies do, they'll give you these cheap rates, but then when you get to your 20th and 22nd month, they're sending you a bill that's saying, oh, your $60 a month, $80,000 life insurance policy, no, your payment is now $220-something a month. So with the insurance policies that I deal with and the insurance companies that I deal with, the rates are flat. So whatever they give you now, it won't change in 24 months. That is something that you really need to be cognizant of, okay? So let's look at basically how do they rate your policy. So there's 3 levels on rating you. You can be, these terms may change, but the basic premise of them is pretty much the same. There is a level, there is a modified, and then there's a graded. Level means that you come in at good health. Everything on your medical background is okay. Everything that you've answered all the questions on the questionnaire correctly or sufficiently, and everything comes out. So a level is the best quote that you can get on a particular type of policy. Now keep in mind that some of the insurance companies that I said that cover you for diabetes, if you smoke and you don't have if you smoke, it is more than likely that your life insurance policy would be more than a person that has diabetes that doesn't smoke. So keep that in mind, because smoking is a deteriorating habit that it will kind of consistently deteriorate your health. So the other type of insurance or rating that there is called modified. So modified simply means that you've answered some of those questions that that leave them paused as saying that what you have is something that is going to affect your mortality rate a little sooner. So what they will do is say on a modified rate, your insurance would be, let's say for instance you have a $10,000 policy, and it will take 2 years for that policy to pay you whole. So if you passed away in the first 12 months of owning this policy, they would only pay out 50%. So if you live another 12 months and go to full 24 months, then the policy pays out whole. So with a graded policy, and this term is normally has different meanings with different insurance companies or different terminology, but the type of rating of it is pretty much the same. It's like a modified, but it takes 3 years for your policy to pay in full. So that means you have to get to the 36th month before your policy pays in full. So normally in the first 12 months, it's only going to pay you maybe a third. Some companies have to where it pays you a certain amount each month over that, but mostly the basic premise is it's going to pay you a third. After the second 12 months, between 12 and 24 months, it's going to pay you out about 2/3 of the policy. And then once you hit the 36th month, then it's going to pay you in full. Okay, so understand that life insurance, I know, is not necessarily a big financial decision, but it is something that you want to be cognizant of because you need to have it, because you don't want to put that burden on your kids or on any of your loved ones who you may leave a responsibility to handle your final needs. The reason why it's called final expense insurance is to help you or help your beneficiaries or help your loved ones with all of your final expenses upon death. So you can use it not only for burial, but it'll pay any of the financial bills that you may have left. So it's up to you to figure exactly how much you need. Okay, so go down below, click below, go down below, answer the few questions, set up an appointment. You can set up an appointment, put your time in there. I will call you at the time that you booked the appointment for. We can talk. I can either come visit you or we can do this over the phone. We can do this whole thing in like 25 minutes, It's not difficult. And once you click on that, I will definitely send you the Social Security free handbook. Thank you for talking to me. Thank you for watching. This is Ron Orr for Forrester Financial Partners, and I'm out. Thanks. Bye.